Ben Maldonado, welcome back to F.A.C.E. Happy New Year, my friend.
Happy New Year to you, Dale, and Happy New Year to the boys, Steve and Stelios and Ryan and all the guys. It's great
Thanks
to
very
hear
much.
you guys.
Happy New Year, mate.
Happy New Year.
Thanks, fellas.
So great to catch up with you, Ben. You know, I remember from a past interview, you had some statement the last time we talked about that people were going to feel blue in December, that there was something in December. Am I recalling that correctly?
Yeah, that's true, and it's kind of a theme which we're gonna cover when we start the presentation, but it's kind of a thing that's gonna continue this year. It's sort of like there's gonna be no joy, and that's gonna just psychologically weigh
No
on
joy
people.
in Mudville.
I think that's what odds favor is gonna be this year, because that's the background weather that we're dealing with.
Okay. You want to share your screen, buddy?
Yeah, let me do that. Let's get this set up. There we go. You see it?
Got it.
Okay, so I asked Dale to have me on early in the year, and he accommodated, because I wanted to sort of set the table for what we're looking at this year from a cycle perspective, and sort of the background weather that we're going to be operating in. And so we start with the cycles, and then we'll go down to the technicals and look at the charts, and we'll throw in some fundamentals and sort of see what asset classes and what investments sort of make it through the three filters, and we'll end up on the bottom as places where we probably should have some money due to the positive expected value that comes from it. So what we're going to cover today is, and if you've heard my presentation before, you know these first two cycles, but I always bring them up because they are the foundation of where we are operating in. They are affecting every human on the planet. And because they are affecting them, they're affecting their psychology, and they're affecting their decision making, and they're affecting their economic choices. So it's going to have a major impact on the markets. So we'll briefly cover the Epoch Cycle and developments there. We'll hit on a few things that Dale's favorite one, the connection with the 70s, and a couple other events that, since the last time we spoke, have sort of checked the box there, that they're also related to the 70s. Then we'll get into the themes for 2023. We'll hit the highlighted markets that are sort of in a position to benefit from those themes coming through. And then we'll spend a couple minutes at the end talking about where possibly the next major crisis could come from that we need to be on the lookout for.
Okay. Speaking of the 70s, I'm going to talk to Doug Casey. Remember him?
Yeah. What's he doing these days?
I'll find out.
Yeah, that's very interesting. That's definitely a name.
Yeah. I cut my teeth on crisis investing. That was his book in the 70s. So
yeah, I mean, that's where we are.
Yeah.
So the major cycle that's affecting every human being on the planet, some handling it better than others, is this Epoch Cycle, which is a 400-year cycle that we're in the last 1%, the last 4 years of this cycle. So we are in the sort of fragmentation and dissolution phase, where the structures and the way society has been organized and what we've depended on is sort of falling apart right in front of our eyes. And as that happens, it's sort of creating this blue feeling that you were talking about, Dale, and sort of this mistrust and this lack of trust in things and institutions that we used to be able to depend upon. We're not going to be able to do that anymore, and more people are waking up to this every day because of their experiences.
You know, I heard a stat that 78% of Americans suffer from depression.
I think it's
78%.
Yeah, it's going to get worse. It's going to get worse. The ones that I've highlighted here, this slide has sort of all the different things that we've talked about in all the presentations I've done here at F.A.C.E. and elsewhere, where we're seeing sort of these large institutions and these organizations and these structures that we've depended on fall apart and begin to fail. the examples are numerous. The ones I want to hone in on now, over Christmas, we saw a major failure in our transportation airline system with these Southwest cancellations. I've talked to some people who were involved in it. They said it was an absolute nightmare. But this is the exact sort of thing that used to be a one-off or an outlier, and now it seems to be happening regularly, where we're seeing something that we took for granted and used in our daily lives is now not reliable anymore. We can't rely on it. So I think the airline debacle is a good example of this. And I also put up this student debt cancellation. Now, why would I put this on this list as an example of a failure of an institution? It's something where there was a contract and there was an agreement and there was a structure that was put in place, which people borrowed billions and trillions of dollars in student loans based on that structure. And in a whim, with the stroke of a pen, they're trying to undo it. And it undermines people's belief in the social contract and in the systems under which we've operated for the last hundreds of years. So this student, while it doesn't seem like a big deal, I believe it's a really, really big deal. And if it actually goes through and it's actually implemented, I think it's going to be another blow to the trust and the confidence that people have in the government and the sort of organizing principles and systems under which we operate.
The one above is going to make that look like a picnic.
There's no questions. And we got the first quake in that one, right? With what happened in the UK. And that's going to be here, Ben. It's going to be massive. It's going to be massive.
I saw that Biden, I think it was $350 billion to the Teamsters.
Yeah.
Shore up their retirement fund.
It's going to be massive because, again, there's a social contract where the organization that was the sort of the initiator of that contract is not living up to their bargain.
The parent took care of their children in the workforce.
Yeah. And it creates that doubt, right? And that uncertainty and that anxiety. And like you said, that feeling of doom and depression.
There'll be a bailout on that in my view, but.
Yeah. So here's the 70s, right? The 70s cycle, which we've talked about. The connections are crazy in terms of the number and what we've seen. This was sort of the first iteration of it, was with Nixon, comparing Nixon with Trump. And you can see, and if you've heard me speak, there's the connections are numerous and they're all there. And you have a Republican, unpopular president with sort of dubious deeds and things all mixed in there. There's only been 4 presidents impeached. Trump and Nixon are 2 of the 4. I mean, it's crazy, but they're the connections. The recent ones we have Jimmy Carter and Joe Biden, and the connections here are mind-boggling as well. I've added a couple new ones because I think they're again showing the strength of this cycle. I should have put this one up earlier last year. It just never dawned on me until I was preparing for this. But when Carter was president, Russia invaded Afghanistan. We funded the Taliban and Osama bin Laden to fight him. Yeah. Now, present day, Russia invades Ukraine. Joe Biden and the U.S. government are funding the Ukrainian opposition to fight them. It's not exactly the same, but man, does it rhyme.
Yeah.
The church committee. I don't know if you know about this one, Dale.
He was a senator?
Yes, Senator Church, a senator from Idaho, Senator Frank Church, established a committee in 1975 to examine the abuses of the intelligence agencies against the American people. CIA, FBI, NSA. There have been calls last year, just in the last month, with the release of the Twitter files and what the the FBI and the intelligence agencies and the government was doing to get access to information and sort of spy on people and censor them. There have been calls for a new church committee. Again, it's not a perfect match, but look at the themes that have come up that were present in 1975 and they're coming up again today. And that's the essence of what cycle work is. It doesn't tell you exactly what's going to happen, but it tells you the things that are going to be emphasized, the things that are going to be important, the things that are going to be on people's minds and come up again. And that's what we're seeing. You can see the other things that we're experiencing, obviously stagflation, the commodity boom we saw in the 70s, commodity boom we've had now. The Roe versus Wade decision was made in 73. The overturning of Roe versus Wade, Dobbs versus Jackson was last year. Again, the similarities are there. So having that is as your background and understanding that can also help point you in the right direction in terms of, where to invest and what to be, what should do well and what should do poorly. So let's look at the themes that we're going to talk about and that I think are going to be prevalent for this coming year. The first one, again, is the really important one because this is one that's going to be driving people's behavior. And remember, markets are driven by human behavior ultimately. The rapid deterioration in the trust in the system and in the reliability of the system is going to intensify this year. I think what we saw over Christmas with the airlines, with Southwest Airlines, is an example. That sort of thing is going to continue to happen, and it's going to happen more frequently, and it's going to happen with greater intensity and greater failures. Why is that important? Because it's going to put in the minds of more and more people that you cannot trust the system. The system is no longer functioning properly. And that creates a problem that comes next, which is civil unrest. If I can't trust the system, or if the system isn't working for me, why should I follow the rules? Why should I?
Don't you see that manifested, Ben, in all the robberies and shoplifting that isn't prosecuted, that's feeding upon itself? There are now like syndicates that go and steal from retail operations and then resell the products.
100%. 100%. That's an example of it.
I've never seen anything like that. In the 70s, I don't think that happened.
No. And Dale, think of this. It's bad enough when you have that criminal element that's taking advantage of it and doing it. But if it happens the way this sort of deterioration that we're looking at may be happening, when the average person, the normal law-abiding, rule-following person starts saying, why should I follow the rules anymore?
Why should I pay?
Right. Why should I pay if these guys are getting away with it? If there's no punishment for the crimes, why should I follow the law? That's where the danger, that's where the fabric of society comes undone, right? Because then the social contract is gone. So that's one thing we have to be on the lookout for, is that sort of acceleration in that lack of trust in the system and the lack of reliability. Start looking for those kind of events and be prepared, because that is something that the cycles are calling for and saying that the background weather is favoring. The third one kind of feeds into what could also lead to more civil unrest and problems, which is we're now going to be entering into a phase where there is no growth, right? The whole system that we've evolved in and we have developed, and the economic system of the world, is based on growth. If there is no growth, there are problems, because you need growth to generate taxes, to pay for things that you've promised and you've sort of contracted for already. And if we don't have growth, it's going to create big problems in society, because then people aren't going to have money, people aren't going to have services, people aren't going to have food, people aren't going to have shelter, and that's going to create serious problems. the economic ramifications of it in looking at the markets are there's going to need to be a revaluation. If companies aren't growing earnings anymore or aren't growing at the expected rates they were before, there's going to have to be a revaluation and a reassessment of, what kind of multiple are we going to put on those earnings? So it's bad policies, policies that have ran up this debt, policies that have, since the pandemic have discouraged people from working. That this whole, we'll pay you to stay home thing, that's hard to undo. Once that genie's out of the bottle, that's really hard to undo. Not to even add in the mountains of debt, which we're going to talk about also. The fourth theme that I think we have to look at and is really strongly prevalent is war. I think not only are we looking at escalation in Ukraine, in the war between Ukraine and Russia, which we've already seen with, Ukraine sort of, beginning to attack Russian soil and the Russians trying to do other things that they weren't doing before. So the escalation there is already happening. The key here is, and some cycle work I've done shows that there is going to be an expansion. And sometime in the third quarter, in the July-August timeframe, I think we're looking at where, historians are going to say that was the start of World War III.
Okay.
My contention is it's already started, right? But it's a proxy war now. But this will be sometime July, August. We're going to see history tell us that was the start of World War III. So
you want my hunch?
Yeah.
All right, Netanyahu is now back in charge.
Mm-hmm.
So, his number one thing, because and Iran is in chaos because of what's happened there. So I think that there could be conflict between Israel and Iran.
Maybe that's the trigger in July. Who knows?
Yeah.
But the cycles are calling for it. It's set up for it. We have a very similar setup as we did in September of in this summer as we did in September of 1939, which was the start of World War II. There's no guarantee it's going to happen. It's just you have to be aware that the odds are higher than normal. We don't get a world war every day, but the odds are much higher than normal this summer that we could have the expansion of the conflict and the beginning of World War III right there. With all that said, all that wonderful cheery news I'm giving, there are going to be major opportunities this year. There's going to be major opportunities in the commodities markets, and believe it or not, there's going to be major opportunities, I think, and based on my work, in the equity markets, which we're going to get into as we run through this. Quickly, let's do a quick review of sort of the environment that we're in and what, based on the cycles and the work that I do, what I'm seeing. A lot of people are calling for the end of inflation, saying, hey, inflation's over. It looks like, as Steve was saying, they're looking at the second derivative, which is the rate of change of the rate of change. You can't maintain that, right? It just, at some point, it's too large, too fast to do. So I put this chart here because in this cycle, you gotta get inflation right if you're going to make money in the markets. If you get inflation wrong, you're going to get run over. And what I think we're going to see is something similar to what we saw in this, late 60s to early 80s period, which is waves of inflation. And, maybe we're in that 1970 area where we got the first wave, right? We got the first wave, and now we're not going to see deflation. We're not going to see prices go back to below where they were before, but we're going to see a lower rate of inflation. So disinflation for a year, maybe 6 months, maybe a year and a half if we're lucky. And then the next ramp in inflation is going to come. And the key thing to take from this chart is looking, if you treated it like a stock or like a market, you saw higher highs and higher lows. And I think that's the kind of thing we're going to see throughout this cycle with inflation. You're going to see, we may have seen the first peak, and now we're going to get a pullback in inflation, but it's going to be higher than it was before. Then the next peak's going to be higher than the previous peak. And the next pullback will be higher than the previous pullback. And so I don't see inflation going away for a while. And based on the cycle work, the Fed is going to have to keep rates higher for longer than most people are counting on at this point. So that's the sort of the story on inflation. Let's go to earnings. Earnings growth is not going to be prevalent for a while. The recent estimate I saw on for 2023 for the S&P 500, the consensus is around $223 in earnings for the S&P 500, which if you put a 15 multiple on it, which is a generous multiple, puts you at about 33.50. JP Morgan, I saw, had an estimate of $209 for earnings for the S&P 500 for this year. You put a 15 multiple on that, you're at 3,100. So as you guys were talking about, on the F.A.C.E show before, going back to those pre-COVID highs, it seems like pretty much a no-brainer right now. It's just a matter of what's the path and how are we going to get there. Because the growth, we're not going to grow our way out of this issue and this problem right now. And the cycles are calling for difficulty in growth and no growth, as a matter of fact. And in a few years, not only are we not going to have growth, we're going to have retraction, right? And contraction. So right now we're going to be dealing with the realization setting in that there's not going to be any growth, and how do we revalue these markets based on that? Okay. Here's the bubble. Everybody knows it. The key thing to take from this slide is that the air is going to come out, and it's coming in. So you've already seen the devastation in the cryptos and the NFTs and the most speculative things. As you guys were also saying in the show, NASDAQ has almost taken out, it's really close to taking out October lows, a lot closer than the S&P and way closer than the Dow. So things move in waves, right? Waves and cycles. We've had this massive flooding of the system with liquidity that has raised asset prices. The air's got to come out of the bubble. So what could that possibly mean for equities? This is a chart you probably know all too well, Dale. What happened during the late 60s into the early 80s with equities? They basically went nowhere.
Yeah.
For 15, 20 years.
Yeah, big range.
And could we be looking at something similar? Again, doesn't mean the S&P has to go to 1,000 and crash, right? Maybe we do go to 3,000 or 2,800 and then back up to 4,000 and then back to 3,000 and then back up to 3,800. Maybe we get stuck in this kind of range for, multiple years, heading into, the late 20s, early 30s, early 2030s. Who knows? It's just something you got to keep in mind. Again, if we're connected to that 70s cycle, it's certainly possible. Talking about war, this is another reason why I think the calls that inflation is dead are a little premature. Just look at these inflationary events and the events that happened around the wars that caused inflation. If we do this escalation and this, extension and expansion of this conflict, it generally causes inflation. Governments spend more money. You're destroying a lot of stuff. You got to build a lot of stuff. You got to replace things. So I think we're in for an expansionary and an inflationary period if we do hit a war. What benefits from that? Commodities. I found this chart in a presentation I was looking at last year, and I thought this was really, really interesting because of, this is a 260-year chart looking at commodities and the different cycles. And we're right in this cycle here where, we're coming off a low and rocketing out of it. And you can see other times when that happened.
Yeah,
This is your 70s commodity bull here.
Yeah,
so I think commodities still have more room to run. They've been correcting for a year now. They're going to correct for a little more time. Maybe it's a potential war this summer. That's the catalyst that gets them really going. But we'll see. The value is there. It's just a matter of timing now for when you want to get in for the next leg up.
We can't have the summer of '69 this year.
I don't think so, buddy.
Oh,
It's not the way the weather forecast is looking.
Build me a time machine.
So here's another interesting chart just showing you, paper versus hard assets. When you're up here at the red line, paper assets are doing much better. When you're down here at the green line, it's when the hard assets are doing. So far, we went from where paper was really performing really well to now we're back to the median. So we got another leg in commodities. Next year or two, 3, we should see a really, really good run in the hard assets again. Okay. Let's go to some charts. I'm bullish on the dollar. I think the turmoil and the lack of confidence and potential war, money and capital will flow to the dollar. So the dollar will be a beneficiary of that. If you look at the monthly chart, we made a nice high and look where the pullback came. That's a bullish pullback if we hold this level.
Okay,
it's just on the highs from 16, the highs from 20
would be your line in the sand.
Yeah, down in that area.
Okay.
But the dollar, I think the dollar's going to
new highs or failing rally.
I think we're going to make new highs.
Okay.
Yep. 120, 130, potentially if things get really crazy and the capital, looks for safety and flies into the dollar. Other thing, yeah, I think he's right. I think he's on it. Okay. Ultimately, the dollar will suffer the same fate as all of them, which we're going to get to at the very end. But for now, it is the safe haven, and it's where money will flow. Fitting with the Epoch cycle and this sort of lack of confidence, I think you got to own gold. I think, we've had this pretty strong run the last couple of months of the year, so there's probably some sort of pullback. This is a monthly chart, but if you use your dailies or your 4 hours or your lower time frames, you can find a good spot where, it would be bullish to get in on a pullback, but I think gold looks good. Silver's another one. I think silver looks really good. Same thing. It's had a good run. Dale's 22 number is as good as any. Look for a good pullback into that level. That would be right around here is 22, 21, 22.
The other rhyme on silver is the Hunts brothers, right?
There you go, from the 70s. This is one that's going to surprise a lot of people, but I think at some point this year, you're going to want to buy some Bitcoin.
Why? How does this fit into the Epoch cycle?
The main way this fits in, Dale, is this is an off ramp to the current system, right? It's a way to say, you know what? I don't want fiat. I don't want to deal with the government controlling the money supply or controlling my money. I want an alternative. And this is one of the alternatives. I have not been a Bitcoin bull. I've not been on this thing at all. But I think no, I think you're going to get a washout, to anywhere from 8 to 12,000, and in that area, I'd start buying some.
Where you have a red vertical line, is that kind of the time frame you'd be looking for something?
Yeah, those are timing lines. Yeah, they things can react on those lines. So
when's the next one coming in? Not that far away.
Again, I would be looking at a panic and risk type thing. So maybe in summertime, if we get a low in risk, Bitcoin probably washes out then, and that might be a decent chance and a decent place to buy. But it's still too early. but I do have it on the radar as a Epoch Cycle type play.
Okay.
Crude. I think energy, it's set up for, we've had this mild winter that's sort of given everybody this false sense of confidence because Europe's not falling apart and having the disaster everyone was talking about over the summer might happen. They were going to freeze and oil was going to be at 200 and natural gas was going to be at 15. Well, I think they're setting record temperatures in Europe. This is going to be the year where oil shines and energy shines. Really, really shines.
Well, the energy stocks never didn't shine all year. Even with the decline in the underlying commodity, XLE was a top performer ETF.
Yeah, I think you got to have exposure to crude, and you got to have exposure to the Widowmaker at some point with natural gas.
Yeah.
Because while it was a partial story in 2022, we saw
you
big,
trade it, Ben, or I'll call your wife.
We saw big moves in these markets, and big moves higher. The real story is going to be this year, so we got to watch that. Okay. On equities, here's a monthly on the ES. I added in sort of little timing for when these Ponzi's were exposed. Here was Enron. Yeah. Here was when Lehman and then Madoff were exposed. And here's your SBF FTX debacle.
Yeah.
So I do think we're going to come down here. Stelios's number and the numbers you guys were talking about, I think, 3,100, 3,200 is possible if we get to there, this summer in a good timing window.
Can't we get there in the first quarter?
It's possible. Absolutely possible.
I mean, the way it's rolling.
Yeah. And if we do, like I said, I think there's going to be opportunities. Again, it's not like, it's a 20-year bull market, buy and hold type of thing, but I think you could have a nice, 6 to 18 month type trade on the long side if we get a washout.
Okay.
NQs, here's NQs. You can see the relative weakness here.
Yeah.
Compared to the other ones. But same story, washout coming. Let's be ready. And then we can put the bullhorns on and have some fun to the upside. Quickly, because I know I'm running up against time. I wanted to touch on this because I think this is important. Everybody's looking for a crash and worried about a crash, and I was like, okay, let's look back and look at the crises we've seen. What causes a financial crisis? Lately, in the last 30 years or so, 40 years, it's been excessive debt and then collateral issues.
So credit problems arise in this cycle of the decline in the stock market. We haven't
think about this.
Had credit events yet.
Remember, right? In the great financial crisis, it was mortgages, right?
Yeah.
And in late 80s, early 90s, it was long-term capital management and foreign bonds and foreign debt, right? So there's always a catalyst. The most debt, where's the most debt been issued in this cycle? It's sovereign governments, man.
Yeah.
That's where the problem's going to be. Now, look how my crazy tying this crap in fits together and see what could possibly happen. The Epoch Cycle is about a loss of confidence in the system. If people start seeing that I can't rely on the government to provide the services that they've provided in the past, why am I paying taxes to them?
Because
why should I
put on an extra 150,000?
And why have they put on an extra? Why do they want to spend another $50 billion or $14 billion or whatever it is on the IRS?
Yeah, that's why.
Because they know it.
Yeah.
If people start calling bullshit and say, I'm not paying taxes anymore, what's going to happen to government bonds? And if government bonds are having trouble, what's the most used instrument for collateral in the world? Government bonds.
Yeah.
Possible. This is nothing that's going to happen this year. It's probably not going to even happen next year. But at the end of this Epoch Cycle, that may be the doom loop right there. 25, 26. I mean, we're already seeing some sort of.
Yeah, we saw it in the UK.
We saw it in the UK with their pensions, right? They had to immediately back down from what they were trying to do.
We saw it in Japan.
You saw it in Japan.
That's
And
why
those are
they moved.
major economies. Because people can dismiss, oh, Lebanon, Sri Lanka, Zambia, they're in default.
Yeah.
Well, they're always in default. Well, Ecuador and Egypt and Ghana and El Salvador, yeah, we know they're in trouble, but they're third world.
Yeah.
Well, in 25 and 26, don't be surprised if this sort of thing comes to the first world. And I mean, here's just a couple quick charts. Public debt's in gold. Look, that's where the growth is, man. Look at it.
Okay, I'm getting a cue, so
Yeah.
if we could wrap it up because
it's all right. I've planted the seed, so now everybody knows about it. If you want to reach me, you can get me on Twitter. Here's my Twitter page.
Yeah, Ben, another great presentation, and I give you more time than anybody.
I appreciate that.
I
Dale.
was ready to keep going, but you know, Stella's my boss, man.
No worries. I understand you guys got tight timelines. The key thing, guys, is keep your head. Don't get emotional about things. Watch for opportunities. Look at things that can benefit from these major cycles, and you'll be okay.
And follow Ben on Twitter at Ben Maldonado, and check out his videos on YouTube. They're excellent.
Thank you, Dale. I appreciate it.
Happy New Year, brother.
Same to you. Have a great year. You and all the guys at F.A.C.E. have a great year. Hope you all do really, really well.
Thank you, Ben. And thank you, everyone. Hope we added value to what you're trying to accomplish in a difficult endeavor. Join the boys in 4 minutes on the Morning Edge. See what the reaction is to. I have no idea what the markets are doing right now when I do interviews. So get back in tune, and I'll see everyone on Monday. Don't just count your pips, count your blessings. Adios. Thanks, Ben.
See you, Dale.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.